Welcome back to the Bitcoin Layer. I'm Nick Bhatia, and today we are going to recap a crazy month for Bitcoin, examine Bitcoin's third major bear market, and think about what to expect over the next few months in Bitcoin and global macro. The first question we want to ask ourselves is, what has happened to Bitcoin? Well, Bitcoin has gone down 75% approximately from its highs late last year in 2021. This is, by our assessment, the third major bear market in Bitcoin. Two previous instances in which Bitcoin went down by over 80%. There is an early instance of Bitcoin going down by 90%, but we're going to put that into the early history category of Bitcoin and really look at this instance in 2022 as the third major bear market in Bitcoin. So the next question obviously becomes, will Bitcoin survive yet again? And we do believe it will. Not only is Bitcoin at a level 5 times above where the last bottom of the last bear market was, but Bitcoin is actually experiencing smaller major declines in its consecutive bear markets. So we see here back in 2013, Bitcoin peaked, and in 2014, 2015, the market went down by 85%. In 2017, the market peaked. Over the next couple years, Bitcoin went down by about 80%. And in the most recent bout, we see Bitcoin going down by about 75%. So there is no denying that this is the depths of Bitcoin's bear market, but we do see from the past that Bitcoin has experienced these crazy deep drawdown bear markets. And it is characteristic of Bitcoin if we look at Bitcoin from a cycle perspective. The difficult thing here is that looking at Bitcoin from a cycle perspective, we only have 3 cycles to go from, with Bitcoin having any material market value. That is not a lot of data. For example, when asset managers are modeling out fixed income and equity returns, they're looking at a century of data. Bitcoin is only looking at about 14 years of data, and only about 10 years of data with Bitcoin representing any real significant market value. So that makes it very difficult to assess Bitcoin cycles. But we can look at Bitcoin's brief history and try to assess what is happening here in Bitcoin, and also try to characterize it as something of the norm, even though it feels like Bitcoin might be dying. So will Bitcoin survive? Yes, but the same can't be said about the crypto industry. I want to bring you guys back to 2017 when we had this bubble in ICOs. ICO stands for Initial Coin Offering. This was the crypto industry's way of trying to reinvent the wheel on equity issuance. These were security tokens that were issued and tried to represent some fraction of the ownership in the project, similar to a shareholder structure. In the end, the market determined that these things were not worthy of owning and not worthy of market value. And then the SEC, the regulation, came after these ICO structures as mimicking securities without registering. So they were sued for being unregistered securities. Now, in the bear market that happened alongside the death of ICOs in 2018, of course, Bitcoin price gets dragged down. As Bitcoin is sold in funds, money is withdrawn from funds, and these funds own a diversified cryptocurrency offering. Now, of course, Bitcoin is going to be sold in that type of environment. We have a similar parallel in 2021, 2022 with the oncoming of DeFi. This is Decentralized Finance. Another way of thinking of this is trying to mimic the fixed income market this time around. So bonds have yields, they have coupons. DeFi was a way to lend and borrow in a cryptocurrency environment that allowed investors to get yield from their crypto assets. Now, in fixed income, the way that yields are offered to investors is by the entity that receives financing investing in productive cash flows and using some of those cash flows to pay back investors. So where did the yield come from? We don't really know. and the odds are that it was coming from fractional reserve lending. Now, in the traditional banking system, fractional reserve lending is accomplished by reserve ratios and having lenders of last resort. In cryptocurrency, there is no such thing. So when lenders extend themselves beyond the point of solvency and there is a bank run, meaning there are withdrawals, bankruptcy happens almost instantly as insolvency is shown to the market. Now, the reason why Bitcoin will survive, even though many participants in the crypto industry will not, is that Bitcoin has genuine use cases. Bitcoin is used for global transactions that are not using a third party. Bitcoin offers financial empowerment because it is an open access network. And Bitcoin is a savings technology. It is an alternative for people to use versus counterparty instruments such as bank deposits, central bank notes, and other government securities. The volatility of Bitcoin does not matter as much as the durability of Bitcoin for these users. So what specifically dragged down Bitcoin this year? We saw it start with Three Arrows Capital and the unwind of the Terra Luna trade. Now, what recently happened to Bitcoin? What was the latest leg in the downside of this bear market? It was due to fraud and stupidity. So let's talk about FTX. The dramatic fall of FTX, I believe, can be attributed to two places. Number one, Sam Bankman-Fried and his fraud. Number two, the venture capital firms that enabled this type of fraud without the proper due diligence. Now, let's start with Sam Bankman-Fried, or SBF. SBF started a sister hedge fund, which is the first major red flag. What are you trying to do? Are you trying to operate a cryptocurrency exchange that enables the trade of crypto assets for traditional currencies? Or are you trying to have a hedge fund and basically a prop shop, which is another way of saying gambling on trades? So the fact that he had both is the first major red flag. Another major red flag here is that we find out that there were some accounting backdoors that were coded into the software that Sam could use. And the last final red flag is that he actually used them and took deposits away from his exchange and put them on his hedge fund and gambled those monies away. So that is an outright fraud, and we can attribute most of the fault here to SBF and his fraudulent activity. But let's not rule out putting some blame on the venture capital firms that put money into this project. Now, I really believe here that not having a board of directors or any sort of insurance mechanism that funds cannot be moved without the approval of multiple parties here, even neutral parties that are brought in from the outside, it's quite astonishing to me. And it shows a true lack of due diligence here from the venture capital firms that invested in FTX. The subsequent unwind here is really the fault of the risk managers that left funds on FTX basically exposed. So Genesis, we know, left $175 million on FTX. That is going to lead to bankruptcy there. BlockFi had a massive exposure to FTX. That's led to bankruptcy as well. And we don't know what other parties might experience bankruptcy off of the back of leaving too many funds or lending too much money to FTX. Now, of course, for Bitcoin, all of these bankruptcies create a negative impact on the price. Why? Because you have forced selling. You have forced selling that occurs because people are withdrawing their money from products that are exposed to Bitcoin and other things such as venture capital, diversified cryptocurrency funds, and any fund that really has money locked up across the industry is going to have some natural exposure to Bitcoin, and that Bitcoin is being sold during this process. We also have the forced selling of Bitcoin to sustain certain business operations. So we see that in the mining space as well. Now, difficulty, as we can see here on the chart, difficulty had been increasing this fall, but we finally see difficulty rolling over and hash rate coming down as miners leave the network. Now, miners are showing that they are exposed to this lower price and higher difficulty. They are not profitable at these current levels. We see that reflected in the stock and bond prices of mining operations. And now we finally see it with difficulty declining and miners shutting down their machines. So miners are going to be forced sellers of Bitcoin as well in this environment. All of this forced selling is the reason why we have Bitcoin prices where they are today, but it's not all gloom and doom. Is there any good news for Bitcoin? Yes, there is. Let's look at this chart in which we see the Bitcoin held on exchanges. We can see by this red shaded area that Bitcoin is leaving exchanges and going into people's wallets, whether it be self-custody, collaborative custody, or some form of deep cold storage. Bitcoin is leaving exchanges and going and being tucked away. Now, this is a sign that when demand does come back into the market, the supply won't necessarily be there to meet the demand at current prices. Now, this doesn't mean that we'll be in a bull market forever just because coins left exchanges during the bear market of November 2022. But what it does mean is that when Bitcoin finally wakes up and its price starts to rise, the supply that is there to meet that current wave of demand will be thin, and it will lead to some explosive price action in the beginning stages of Bitcoin's next bull market. Now, we don't know when that bull market is going to take place, but what we do have an idea of is why that bull market will take place. Number one, raw Bitcoin adoption. Now, Bitcoin is a monetary network. That means it is used as money. That means that there is transactional demand for Bitcoin that is separate from the speculative demand that exists for Bitcoin. The transactional demand for Bitcoin comes from people that need to use Bitcoin or prefer to use Bitcoin in their transactions for whatever reason. It might be because the banking infrastructure that they have access to is not up to par, and it might also be a political expression that people choose to use this apolitical money that is free from any government or any bank. Now, the transactional demand for Bitcoin exists and does provide a theoretical price floor to Bitcoin. It's just that it's theoretical. We don't know where that price floor is. But the reality is that Bitcoin is used by real people every day across the world, and that demand will create a floor for Bitcoin's price. Number two, the end of tight monetary policy. So all year we have seen Bitcoin come down alongside stocks and other risk assets as the Fed has hammered the table on forceful tightening of monetary policy to fight 40-year high inflation. Now, we finally see those trends starting to reverse. We've been talking about it for a while here at the Bitcoin Layer, looking at CPI coming down off of 9% over the summer. It has trended lower ever since then. We've also seen PMI surveys and other economic surveys show contraction in various parts of the economy. We're seeing that now confirmed all over the world with contractionary survey data coming in and showing that businesses are seeing slowing demand, they are slowing new orders, they are slowing employment, meaning they're slowing hiring, and they're seeing lower prices paid. So we can see negative month-over-month numbers in some of the consumer and producer prices around the world, and all of that is leading to the end of this uber tight monetary policy. So Jerome Powell just admitted today that the Fed is going to slow its pace of hikes as soon as December, and the market is pricing in really the end of hikes coming at some point over the next couple months. The rates market is probably going to take the Fed one step further and pressure them to pause right after the December meeting. This will happen when 2s and 5s and parts of the front end of the US Treasury yield curve come down below the Fed funds rate, which really could happen here in the next couple weeks. This is signaling the end of tight monetary policy. So the beginning of Bitcoin's bull market will probably come with a lot more global monetary easing, not just the mere end of tightening, but at least this pressure on the pressure from macro on risk assets is beginning to be lifted. Thanks for sticking with us at the Bitcoin Layer. Please make sure to subscribe. And I want to thank our sponsor Voltage, providing industry-grade Bitcoin and Lightning Network infrastructure.